Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, April the 29th, the year 2019. Let's talk trading. Trade what you see. I've been espousing that for years now, over a decade, probably close to 2 decades, maybe even more. Um, you can't trade what you can't see. And by see, I don't necessarily mean using your eyes, but it's your mind's eye. In other words, if somebody is presenting a system or a method of trading or anything else in life for that matter, if you don't quote unquote see it, you're not going to be able to do it. And then other things in life, they're staring you in the face. They're so obvious. But if you can't see it, then you're just not going to get it. You're going to miss it. I mean, some things they're like right under your nose. They're just so obvious. And then finally, sometimes you get knocked out of your normal paradigm, and then it's still all of a sudden it's like, oh yeah, now I see it. I get it. That aha moment, that ton of bricks falling on your head moment. It's just right there. And sometimes you discover something for yourself and everybody else is like, well, duh. It's so obvious. Doesn't everybody know that? So that's why I'm bringing this up. I've been getting a few new followers, I guess, on YouTube, watching my trading videos for the most part. And I'm getting some questions, so I just thought I should maybe kind of go back to some of my beginning philosophies or beginning methods and ideas, and just maybe just do a refresher for those of you who haven't seen these or have seen these for years, and then for the new folks, they'll get a little more understanding about what I'm presenting and why I'm presenting it and how I came up with it in the first place. So, money and risk management. In trading, there's only a few things you can control. I think I went over those in my All You Need to Know About Trading video. But there's only a few things you can control, and your risk, the amount that you're willing to lose per trade, is one of them. And the thing is when you have a loss, if you take it personally, then maybe trading isn't the thing for you, because the market doesn't care about me, doesn't care about you. The market just does what it does. I mean, for all those people who say, oh, they ran my stop. I mean, did they? Do you really think in an account your size they're going to run the stop? I mean, come on, let's just be real here. You can control your position size and you can control where you put your stop loss. And so you see here, these two equations, these are, position size is a function or stop loss is a function. You get to pick two and then you calculate the third. I mean, if you pick position size and you pick stop loss, then you might wind up risking a little bit more than you're willing to lose. So that's why, you have to pick this one first, and then you get to pick one or the other, and then you calculate the third. Simple, right? Okay, last night when I posted the video, we had somebody had a gap that hadn't filled, but now they're all filled again. So it's just real simple. Once again, trade what you see. And so what, for me, if I see something, and I've had thousands of hours in front of these screens staring at charts. So if something clicks, and it's like, wait a minute, I think I see something. So I see this open gap here. You see there's about 11 pip difference between the gap here, or 11 pip difference between the close of Friday and the open of Sunday/Monday, depending on where you are in the world, right here. And so I said, wow, look at that. That seems to always fill. So then I, write an indicator to run the frequency distribution, or to see, how many times does it actually fill? Is it, 90, 95, 99, 100 during that next week? And, it's something real simple to see. And it's just like, hey, there's money to be made on those open gaps. Of course, sometimes the spreads can be a little crazy, and that's why we've got the spread here. So we can see what the spread are. Is it tradable? But once again, I saw it. Then I confirmed it with, with a test, frequency distribution, running the statistics. And remember, statistics deal with past events, probabilities deal with future events. So don't get too confused, even though the math is very similar. Okay, we still are below the yearly open by 58 pips, but the month has turned green. Okay, I think we were looking at that in yesterday's video. We were getting close to that. And you can see right here, this was the open for the month right here. Right now we're 15 pips above it. And you can see we're getting close to the high of day one of the month. Because see, we're just looking at the first day of the week, month, and year, just for that opening range, and we're looking for breakouts. That's what this is all about, breakout. Remember, from trading, you either have a breakout or you have a reversal. That's all that can happen. When you when you really break it down, trading really is simple. And that's why, all you need to know about trading is really a one-page handout, but I did make a PDF, and I think it's about 6 or 7 pages just to give some white space, but I can pretty much cram it into one page. And, I know you guys see all these webinars and seminars you can go to. Some are free, some charge, $500 or $5,000. And, if I were to do one of these, and charge somebody anything, and I hand them one piece of paper, they're going to demand their money back. So rather than go through all that rigmarole, I just put it out here for no charge, and let people decide if it's for them or not. And I like to look at the opens from the first day of the month. Once again, then you can, you get the color of the candle. And using the indicator, I'm looking at the last 12. Actually, that one needs to be changed. I used a different profile, and I guess this one didn't get updated. So you just come over to the indicator here, and if I remember correctly, it was April 1 was the first trading day for the month. Same thing here for the high and the low on the plot by date indicator, which is another thing. I just thought it was just one of these really simple things. It's just like have an indicator where you can put some dates in, and you can get a simple horizontal line based on values from that date, where I believe so here we can do the open, the high, the lows, the close, and the midpoint. And if you want to shade zones, you can shade zones like so. Boy, that's pretty colorful, isn't it? But it's showing you the zones for each of those days. Inside bar, once again, very simple, horizontal lines. In fact, there's one trader was asking me something about he's starting to see things the way I see them, and maybe he's going to put away those squiggly line toys. I think you mentioned MACD and RSI and all those others. I mean, hey, if it works for you, fine, have at it. I just think it's funny. I think it's akin to, what are those reading tea leaves or something? Why are you playing with squiggly lines when you can use a simple horizontal line? Because price is going up and down. Yeah, it moves. Price itself moves in a squiggly line. So why would you have a squiggly on a squiggly? I mean, use a horizontal line. Price broke out yesterday's high, the previous session's high, by 14 pips at the moment. I mean, simple trades. You see these things happen every day. And this is a very anemic day. Nobody's over 100 pips in range. I don't think I've seen one of these days in a long time. Is this a holiday or something? And we're looking at the holo. As you can see, we're making a new high. And right here is the highest open. So wait for price to this candle to close, and then look for price to head below 124, about 82. And as you can see here, price just took off, heading away. And VWAP really is a squiggly, but I just want to know what the current value of VWAP is. And the fact that it plots back here, I could not even have a line for it. I just want to know where it is, because price has a tendency to return to the VWAP. Okay, we've got a situation here where we're making a new high. Now there was that same trader was asking about, he says kind of getting the rat zone and the wick zone confused. See, the rat zone works off the current daily high and the current daily low, and we've got 20 pip range here. I mean, you can change it to 10 if you want, but I like 20 because usually, based on statistics, price will exit the zone. Now, I don't wait for here to trigger. I might trigger up here off a rat reversal or a turn trade or any of those different entry ways to enter. But I just want to make sure I'm in the zone when I enter, because price will leave it. Now, the wick zone, on the other hand, works off the previous candle's high, low, top, and bottom. And okay, we took out the pivot here. Once again, we're trying to take out this pivot that was missed. Price action. Pro trade, wanna here, green at the line. You got a 3-ball here, look red at the line at 124.80. Unless you do the holo trade, and you'll get in a little bit quicker. And here's the wick zone. And yesterday, price had already gone in and out. Then price was in here, and as you can see, in it, out, in, out, in and out again. This is based on yesterday's high, top, bottom, low of the candle, and the rat zone is on the current daily high and low, 20 pips off there. Okay, once again, see, one of my favorite trades is these lines. Simple, simple, simple. And you can see here, somebody else was asking about 1 minute chart and the Einstein line. I said if you want to use the Einstein line, I like to use the my tick indicator. Once again, if you don't have it, if you hit F9, you can see. So right here, there's the valley of the ask. Right here, price is not going up unless the bid gets above that level. So that's kind of quick wrap up there, fellow traders. Just remember, it's not what you trade, it's how you trade it. So go drain the banks.